Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. I've recently talked about HELOCs or home equity lines of credit with one of my friends and thought I would let everyone know some of my experiences. So an HELOC is a home equity line of credit, a line of credit covered by real estate. If you have no mortgage, you can go to your financial institution, get a line of credit that's secured by the real estate, and it'll have a lower interest rate than an unsecured line of credit, which is only secured by your good credit rating and your history. So instead of a regular mortgage, you can also get a HELOC when you buy a property. But of course, that's going to be nearly maxed out with the loan for the home. So for the HELOC, you only pay the interest, usually monthly. So payments should be less than if you had a mortgage where you're also paying a principal. Now, although you're paying a higher interest rate with the HELOC than the mortgage, and you're not paying down the principal at all, you will get lower payments with the HELOC. The HELOC is more flexible than a mortgage because you can put money into it and pay it down and avoid paying interest anytime you want. And you can also pull out money whenever you need it. If there's no balance, no interest is paid, which I think is very cool. So for these benefits and flexibility, the penalty is a higher interest rate than with a standard mortgage. For the limit on the HELOC, my credit union keeps the credit limit to 65% of the government assessment of the property, or 80% if the property is professionally estimated, which will cost you $400 to $500, and they will make you pay it. Other institutions may be different. So as an example, if your property is worth 500,000, if you get the property professionally estimated, your credit limit on the HELOC is going to be 400,000, but only 65% of that 500 if you're not getting it professionally estimated and it's just using the assessment. So the HELOC is like a mortgage in that the bank is put on a title at a lawyer's or notary's, and then it needs to be taken off title when you sell. So you're paying for that as well, probably $500 to $600 for a notary, and make sure you shop around. It'll be more for a lawyer, however. When you apply for the HELOC, the lender calculates the credit limit, and that's what you have from then on. If the property goes up in price, it's a new loan application to increase the credit limit. You can shop around for the lowest interest rate, either yourself or via a mortgage broker. But having a HELOC with your main bank is easiest because you can move money easily in and out. If you have it at another institution, you can set up automatic transfers to pay the interest. But if you have a spare $100 to throw into the HELOC to save a bit of interest, it could be hard to put that money into the HELOC if it's at another institution. If money transfers to the other institution are set up as a bill payment, even then it'll probably take a day or two to transfer the money in or out. If you use the HELOC as a mortgage or it's constantly maxed out, the money transfers and the flexibility may not be that important, with monthly automated payments being okay. If you use it all the time for small purchases, then make sure that it's convenient. A HELOC can also be used to invest and can be made a part of the Smith maneuver, link in the upper right, where the available equity in real estate property is used to invest in a non-registered cash flow producing asset. And then the interest on the HELOC can be written off when you're doing your taxes. I hope some of my experiences and insights into HELOCs and HELOC use are of help to you. And if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.